India is a very unique country. We associate a lot of pride and emotion in the way we build our homes. It is not only a commodity or a milestone in somebody's life. It is one of the most important milestones. In terms of processing also, home loan is the amalgamation of all kind of other loan processing. It was never a case that how good you can assess the customer. Now the case is how fast you can assess the customer. AI is first of all, it's a big value add. It's a big value add, but we are at a nascent stage. We are still evolving. We are one generation which is going to hand over the baton of AI to the next generation in a much sharper and a better way. But we are the ones who have to actually own.
What will matter most in the next era of lending? Will it be scale, speed, judgment, or some people will be affected thought?
See, if you are
Hey everyone, welcome to another episode of Trust Matters, podcast where we talk about things related to trust. A home loan is something that which is sort of a very large financial commitment that a lot of Indians make. It's a bet that your job holds, the family stays well, and then income keeps coming, and this goes on for decades. On the other side, the lender is also making a big bet. In lending crores against established slips and a few documents on file. This is what makes housing finance unlike any other kind of lending. It's deeply human, it's high stakes, and when it goes wrong, it's rarely a number on a board. And we have a very special guest here today to take a deep dive into the financing ecosystem in India. Someone who spent more than 2 decades in risk across some of India's biggest matters. Rajneesh Sharma, welcome to the
Thank you.
Trust Matters podcast. I will let you introduce yourself because I don't think I can do justice to your
It's been almost 25 years into lending business. Started in almost 2002. At that point of time, the lending business was completely different from what it is today. In fact, when I look back, it looks like two worlds. Started in 2002 almost, and since then have been contributing towards different companies in the capacity of debt management, risk policies, operational risk management, internal audit, and so on and so forth. And here I am since last almost 8 years with Hero Group. Hero Housing Finance, I came in 2022 when I was deputed from Hero FinCorp to set up fraud control and other risk departments, and then took over as chief risk officer in last year in 2025 when our mentor and one of the old member of Hero Housing Finance planned to hang his year. So since last 8-9 months have been a roller coaster. The market has not let us sleep well. And there's a lot to do. There's a lot to be done. There's a lot which has been done since then. And we see this as challenge. We see this as exponential growth into all kinds of assets. At the same time, when you grow assets, then with that comes a lot of difficulties and problems. And that is why in today's world, the financial industry see risk more as a component to add on to right to win than just approving or canceling the deal. And that is how we are managing the show at this point.
Yeah, thank you so much for that. And I think we'll definitely get into what's changed over the time. But, let's just start off with the conversation about, a lot of people think of risk function, and it's really sum-up-simple. I think it's like if you go into any organization, like, risk, they'll say no. To avoid the bad loan, to keep the lights on and all of that. I think, what is your philosophy on what risk really is in housing finance?
See, over a period of time, as I just said, risk has changed its colors. I mean, I would not blame people when they think about risk as a department or an individual who says no to certain things. To a certain extent, it was correct, but not anymore. In the last 5 years, or maybe I can say in the last 10 years, the world has changed completely. In fact, on a lighter note, you can say that we have seen it all. And hopefully seen it all. No more, curves left. We have seen COVID. We have understood how to manage remotely, how to do business remotely. Then we saw different kind of, meltdowns and wars and all those effects. So in all such circumstances, the risk has come out very, very clearly in helping business to create a right to win. When I say that, I meant that business alone is not responsible or should not be responsible for creating a right to win for the organization. Because unless and until all the other components of business, and risk is one of the most important components of business, come together, it is difficult to scale the market at this point of time. As I say, the margins are thin, the difficulties are more. So if we all don't come together and drive business in a way that it becomes profitable, economically viable, I don't think we stand a chance in the market. And there, risk plays a very important. So I would say that this is the biggest shift from where risk was in the background to where it is in the foreground.
Right. Yeah, and absolutely well put, because I think what we are also seeing is generally when I talk to folks, like risk is no longer what people sort of imagine that, you go to that and you get bogged down by no's and you'll fight for a yes. But I think risk is now very proactive in its approach in saying, look, I understand you have to do business, but I also understand I have to, as a function, protect the business. So I think that fine interplay is something that probably sits very squarely in probably your world. Now, I think let's talk a little bit about the state of Alec finance. I think home loan obviously is not just another asset class. I think there's a lot of dignity attached to it. It's emotion attached to it, and it's a big purchase for most people. It's sort of what defines them in some ways, right? With the NPAs now sitting around 2-4%, how does the human side of it change how we think about risk?
See, India is a very unique country, and we associate a lot of pride and emotion in the way we build our homes. It is not only a commodity or a milestone in somebody's life. It is one of the most important milestone of a professional or a salaried or for somebody who is trying to build a home for himself. I would not say house, a home for himself. So that ways the product itself has, I would say, is right at the top in the pedigree list of different loans we do. In terms of processing also, home loan is the amalgamation of all kind of other loan processing. So what you do in an unsecured loan, what you do, say in a gold loan, in a car loan, the processing goes many notches up in terms of home loan. So both in terms of building a home, and then to build a home, if you require a loan, then what kind of processing and what kind of action is taken both from the client side as well as from the financial institution side grows in magnitude when it is about home loan. So that ways, if you are associating yourself to extend loans for customers to buy homes, you yourself is at the top pedigree of financial institutions which provide loans.
Right. Now a loan like this obviously goes 15, 20 years, 30 years. There's a very long time period, right? And how do you underwrite someone knowing that, as we've witnessed, especially recently, things change overnight. So how do you take sort of that underwriting risk for 20, 30 years? What's the mechanism for that?
So, with the advent of all the fintech and everything, life has become easier, and with that, it also brings a lot of headache for the risk guy. Because as life has become easier for a processing unit, at the same time, there's a whole lot of fintech available or solution available to actually guide you in a different way if the customer wants you to guide. I should not be using using the word, but if they want to defraud me, right? Okay. So it has been that kind of environment for long, and it is increasing. So it is a difficult ask that how you underwrite a 20-year loan or a 15-year loan at the current scenario when every year things are changing. But that is where the risk comes into play. There are a whole lot of tools available in the market. There are a whole lot of understanding available in the market, which gives you a good understanding of the customer behavior. Unfortunately, in India, we tend to rely more on paper credit and less on the experience of the customer has shown in terms of handling different kind of loans and all that. But the paper credit is also not that weak here, and it gives you a lot of, and with the advent of all kind of solution by the minute, now the processing has become very faster, and that has become the USP of almost all the financial institutions, who can do faster and who can do better. I would say the less number of mistakes you do in processing a loan and the faster you do will win the race and is winning the race. So, it was never a case that how good you can assess the customer. Now the case is how fast you can assess the customer. And in doing so, risk plays a very, very important role in keeping everybody's conscience under check. And then customers, the good customer and the bad customer, both are available in the market. There is an intent issue and there is a capacity issue. The intent issue has to be weeded out. The capacity issue has to be dealt with. And that is how we manage the show.
It's very interesting you said, because there's this whole concept of speed, obviously. And this is now across all our lives, right? Quick commerce, everything has to be instant.
Yeah.
Where, considering the loan amount, and like you said, it's the top of probably the kind of loan that you ever take. Even there now expectations are changing. So, if you were to look at some of the other sort of segments that require the housing, right? There's improper documentation. There isn't enough. It's a very thin file customer. There's probably, some sort of geographic concentration where issues and all. So how do you balance all of that and bring all that into bear at the speed that you're talking about?
A very, very good question and a very favorable question. Thanks for giving me that question. See, we excel in doing cases which are not standard. So we deal with two kind of I can say underwriting. One is on the profile and another one is on the property. Okay, and we tend to have both the pillars as strong as possible, but can take a call in one of the pillars and just take a call, not keep a blind eye towards any of the misgivings in any of the two sections, but can take a call in one of the situation if the other situation is very, very good. So if somebody's property say is unapproved, but the profile is very good, then we go ahead and process the case, and vice versa. So, as you said it rightly, there are geographies, and that is the space where a housing finance company like us exists. That what customers cannot go to a bank because of the lack of proper documentation, proper income set or whatever to demonstrate. Those are the sections which are dealt with by HFC like us. So we take pride in going to the customer, assessing them on their real-time income, and then coming back because there is no standard document for their assessment, and then try to provide loans as and when.
Very interesting. I think, we sort of talk about housing finance. People tend to club, housing finance and commercial finances sort of as a one single bucket. And I'm sure as a risk officer, you look at this slightly differently. What would be the nuances between that?
See, not only as a risk officer, the regulators have also looked at it completely differently. Even in Hero Housing Finance, we have three different verticals. One takes care of construction finance. Then we have LAP, loan against property, and housing. And all three have got different colors, different ways of handling, and different ticket size to manage. While LAP is predominantly to self-employed segment, home loan is towards salaried and self-employed both, and construction finance is more like a project finance rolled out to builders. So these are three different verticals which are there in our organization and in most of the organizations, and the entire skill set developed to manage these three verticals are completely different, and they require different skill set, and that is how we manage the show. As far as risk is concerned, there is a very clear direction from the regulators in what can be the book composition and how they can be managed. The board is there on top of the management to understand that where we are going and how it is going. And a quarterly report to risk management committee as well as the board keeps us all active and honest towards what book we are building. And that has been the case always. So though we have got three different products, but all these three different products are managed both at business and risk level in a different way.
Then just quick 30 seconds. Is one more complex or harder to sort of underwrite than the other because of either lack of information or the complexity or just business?
All three of them have got different issues as well as different contours to manage. I would not say one is easier than other or one is difficult than other, but all three have got their own ways of management, both sales, business as well as risk management. And while construction finance is a larger ticket loan to be managed in a different way because it's more of a B2B kind of situation. But when it comes to home loan and LAP, it is more towards granular, building a granular book. The ticket size is much lesser than construction finance. And so more people are required on the ground, more people are required to do the business, more people are required to collect on the business done, book maintained. And when we present to the external world that how it can be managed or how well we are managing, we manage the entire portfolio, we present the entire portfolio together.
Right. I think that's interesting. And rightly put, I think that it's complex in its own. Each of them have their own complexities and challenges. Now, let's talk a little bit about the culture. I mean, so as a risk officer, you obviously have a team.
That's one of the major
cases, right? How do you create a culture where fraud control is not seen as something that will prevent growth, but it actually is a way to protect future growth? So I think there's a slight mind shift there.
As a chief risk officer, one of the major role I play is to develop the culture of risk management in the organization. Because to me, the job is half done if the buy-in is there that risk management is important and all the aspects of risk management is important. If I touch upon the fraud control, how we manage it, see, there is a very old saying that fraud control is everybody's job. It is not limited to a department's job. It becomes very limited in its scope only when the fraud control team is not presenting the solution or is not thinking about business at large. If they live in silos and deal in silos, then they will remain in silos. So my major thrust has always been, and it has been always, that fraud control should be explained to the client. And when I say client, these are my internal clients, the business, the credit, the operation are my internal customers. If they understand it well, that how fraud control can contribute towards business. So everybody thinks, most of the people thinks that fraud control is a cost to the company. I feel that it's a revenue to the company, And how it is revenue to the company is that it clearly adds to the P&L by not adding fraud to the P&L. Because if one case goes bad because of fraud in any of the geography, not only the P&L goes for a toss, the entire trust goes for a toss, right? And most of decentralized way of working emanates from trust you have on the people on the ground. So that is how I take fraud control as a subject, and I try to convey this to the entire team, that everybody's job is to stop fraud, and if somebody is contributing towards it, then he should be appreciated.
Yeah, absolutely. And I think, it's an often underlooked sort of conversation about culture. Because I think and I think the way you put it rightly said, you have to sort of educate everybody, bring everybody on the same, we always say that fraud happens only whenever the wheel gets linked. And if you take your eye off the ball for a minute, that's when you get absolute challenge. Now, one maybe slightly controversial, but question I'll ask anyway. So we have account aggregators, we have embedded finance now, we have the bureaus, and you have digital journeys, co-lending, all kinds of things that happen. From a credit decisioning standpoint, has it genuinely improved it, or some of it is just repackaged?
Or it has improved tremendously. First and foremost, it has cut down on my turnaround time. Second is that it has institutionalized the entire way of understanding business, processing the file, and ultimately giving loan to the customer. So my account aggregator has given me the power to not only underwrite the customer, but also service him after the loan. So that was never there. And you talk about there is whole lot of human intervention which was fraught with mistakes and overlooking the finer details, or so many other things, have now been taken over by fintech, and different products are available there. And they not only give me almost 99-100% foolproof output, but they also increase the trust of the underwriter in what they are underwriting. Earlier, so taking call has become easier. Right? Taking call has become easier because whatever they base their call on, they base their assumption on, they have full faith that part of the documentation or the process is foolproof.
Right. And that's interesting. That's good to know. I think that it's moving in that direction. It's with that now, with AI coming in, whole different ballgame, right? I think has it entered the underwriting world? I'm sure it has. Like, get to know a little bit more about that. And then, especially in something like this, we talked about the human element and the fact that this is a big purchase. What is that now? What's the fine balance between AI making decisions and the human factor, making sure you still sort of retain some of that?
So I have a different take on this. AI first of all, it's a big value add. It's a big value add, but we are at a nascent stage. We are still evolving. And when I say we, I'm talking about the industry, not talking about my company, but talking about the industry. We are at a nascent stage. We are evolving. We are trying to understand the use cases of what AI can bring to the table. But having said that, the same AI is also available to the customer now. So, so things like customer servicing and talking to the customer, trying to convince the customer has become a lot difficult now because he is more informed. He doesn't have to believe the word of mouth. He doesn't have to believe the neighbor's choice. He can do all his research on his own and understand that what is good for him and what is not. So the passage, or I would say the area which was opaque earlier to the customer has now opened up for him. And he can take more informed decision. At the same time, what has happened to financial institution like us, that we are still testing what all AI can do. We have say found out 5 ways of using AI or 10 ways of using AI, but I'm 100% sure that there are 100 more ways of using AI, and all of those has to be harnessed. So I would say that we are one generation which is going to hand over the baton of AI to the next generation in a much sharper and a better way. But we are the ones who have to actually own it. And AI is a beautiful intervention. Very interesting, very exciting, but still a lot to get.
Yeah, and I think especially in use cases like this where there is an individual involved and a family involved, I think it's prudent, like you said, to first understand the contours of what AI can do. How do you manage that? How do you make sure that there is accountability in that, and you're not introducing bias in it? And there's a whole host of that. Still we figured out. And like you said, we are probably version 1 right now. Yeah, and a long ways to go. I think on the flip side of it, what is the one sort of comfort that AI can create inside of organizations? It's sort of a false comfort that, I've got AI now, I'm good. I think because I'm hearing a lot of that. It's like, put AI.
I think not a false comfort, a real comfort, that a few of the things which used to take a lot of planning, a lot of understanding, and a whole lot of budget to bring it to the production stage can be done in a shorter period of time at a very, I would say, minuscule budget. For example, calling a customer. Now, earlier we had telecallers and they used to call the customer. Now you can have AIs and bots and everything who can call exponentially high customer in a shorter period of time. So this is the entire processing has become faster. Yes, that is one thing. Second, which we are trying to understand, is that how, and we have inroads there, that how we can include AI in the faster processing. And we are getting good results there also. And once it is formalized and institutionalized, then it will be great to see that how we can do it better and faster. One of the misgivings which I hear, and we all are human and we get affected by the news around us, that there could be a lot of job cut because of AI coming in the way, which I feel to an extent can be correct. I am not the right person to comment on that. But what I see is that in every era, there is some invention or other has happened, and human race has learned to upskill itself and live with that. Right. Because if there are, I don't know if I'm right or wrong, 4 billion people living on this planet, if that number is correct,
7 billion.
7 billion, they will find a way to adapt and earn their means. AI or no AI. So that fear of instability maybe right now may be true, but it will not stay. It will not stay. Yeah, and we learn our ways to handle AI and human together.
Yeah, rightly put. I think we are going to see people evolve. Yeah. That's what humans have done. We've survived for this long. We will figure a way out to actually work well with it. And we're seeing people that are adopting AIs really starting to pull ahead of the rest. Not because they think of it as adversarial, but more as a partner in there.
Why I said that is that don't be fearful, embrace it.
Yeah, absolutely. I'll move to trust a little bit now. This is obviously heavy on trust, this whole industry and business, right? No, so good lending is not just about lending well, but it's also about what happens when they, you have to recover, right, from a loss of trust, either by some kind of paying off or NPAs or whatever, or even for the individual if they didn't get what they wanted to take care of. So what does responsible recovery look like in practice for valuation?
See, first and foremost, you have to be on the right side of regulation. The regulators have come out very, very clearly that how you have to handle your debt management, and how you have to recover, how the recovery should be, and all those things. So all these things are very, very clearly mentioned, and one has to train to be on the right side of those rules. That is one thing. Second is that you have to start very early. And that is where another use case of AI can come into play, that they can actually forecast where to go first and which one can go wrong. Your early warning signals should be very, very strong. Because in today's world, what has happened is that one customer is exposed to different financial institutions, maybe for different products. Somebody is having a car loan, a credit card, and a home loan, or maybe a student loan or a credit card and a home loan. So you have to start early to gain that advantage of first mover. Because what is seen historically is that who reaches the customer first will get the EMI first. Okay, so that is where your early warning signal and another use of AI intervention is very well explained and lined. And then, most importantly, the communication. The communication of the customer should never break. Even when you are trying to go with your legal tools to recover, the communication with the customer should continue. And you should always appraise him about what can be the outcome of the recent interventions for recovering the dues. Yeah. And I have seen, and trust me, it works. I have seen people, and especially in home loans. I mean, LAP can be a different story. Especially in home loans, people take a lot of pride in where they stay and where their family is secured and all. And most of the time, if the capacity issue has not grown exponentially for them, they would like to pay back even with a delay. And that is where the communication plays a very important role. Most importantly, and another AI use case is that how fast you can do it. What are the stages of recovery? All stages of recovery, right from calling pre-due to calling post-due to sending letters to the customer, to visit the customer. There are different tools available in the market which can record your visit to the customer, what you are talking to the customer, and all those things. How well they are interlinked. Because what I have seen is that a lot of loss of transmission happened in the past. One department not calling out the next department in time to let them know how the customer should be handled. And all of this can be done through AI in a much shorter time frame at a much faster rate.
Right. I think this dovetails very nicely to the next sort of point about, empathy and discipline will go hand in hand, especially when someone's in a distressed state, right? How do you sort of do a balance between the two? Because you have to have maximum amounts of empathy for the individual. It could be something out of their control, like COVID happened, macroeconomic conditions, war has happened, versus, you're still in business too.
Yeah.
So how do you balance?
So I said it earlier also. Communication with the customer is the key. You have to make people understand that how important it is to pay EMI, and the kind of customer profile we deal in. The banking habits are not that great, So we have to not only inculcate that culture of or discipline of paying back in time, we have to also keep informing them that what can go wrong if they don't do it, And then the smaller rewards in terms of, even calling out a customer saying that you have been great in paying last 12 months or something of that sort. One of the biggest fallacies is that we contact a customer only when he's in distress and not paying. So it is good to contact a customer when he's in good times also, so that he understands that you are not a bank or a financial institution for him, you're actually a friend for him. Right. And if that happens, and few of the companies have done really well in establishing that process, we also believe in that. And if that happens, then we shake hand with customer and try to deal with his problem together. Be it arranging funds for him, looking for how to declog his entire portfolio of loans and how it can be managed well. Can we extend him more money on different properties or something of that sort, provided all the regulatory norms are in place and the bureau looks good and everything. And it can all happen when you catch them young, when you catch them early, that where the stress is, what can go wrong and how we can manage it. So that is one part when you have caught them young. If you have not caught them young and they are moving towards NPA and everything, the legal application of legal tool doesn't mean that you have to be at war with him. You can still make him understand that these are the requirements of a financial institution, which has been provided under the law of the land, and regulators asked for it, and we are bound to do what we are doing. Once that kind of communication happens, more often than not, the customer falls in.
Yeah, and I love that, because I think you sort of put it so well, saying empathy in this whole conversation that you talked about. The underlying was empathy. Yeah. At the end of the day, it's one human to another human. Then yes, it's an institution, but at the same time, it's
I understand your problem, but I'm doing what I have to do
as well. So, and I think the key you said is the continuous communication. I think that is a thread. If I would ask anyone to take away from this, is just make sure you're always, it's good times, bad times, you're always there.
Yeah.
I think that creates that trust in the system as well. The thing in closing, I'll talk about, maybe ask you a little bit. You've been in sort of pretty much every part of the risk ecosystem, right? And if I were to say that, hey, a younger you, I wish I knew this before I started down this journey, what would that be? Something that I told you.
I would have joined sales. I would have joined sales, not because to me, it's an easier job. I still think, being a risk guy, I still think one of the most difficult job in a financial institution is the sales job, because you are actually fighting it out in the market for one single file where 10 others are wriggling it for it. But at the same time, it is most rewarding also. It is most rewarding and most appreciated also. Not that risk is not appreciated, but it might be coming a close second or a close third. So personally, I love my job. I love being a risk manager. I love what I am doing right now. There's a whole lot of responsibility, and the way organization has shown faith in me is immense, and I take it with a whole lot of gratitude. I thank my stars and my gods every day that I am where I am, and this is an opportunity. But on a lighter note, I would have loved to be a sales guy.
Fair enough. One last 30-second point from you. What will matter most in the next era of lending? Will it be scale, speed, judgment, or something completely as a game thought about?
See, if you have the best judgment, and that can come from the best of the learnings you have in the past, and adding up all the fintech and the AI-led solutions, you'll scale. And if you'll scale, and you will only scale when you have shown speed in the market. So all of them are important. I have grown in stature, so if I stopped aspiring for one, I aspire for one.
There. On that note, thank you so much, Rajneesh. This has been extremely enlightening, and I think for me personally, if I were to take one thing away, is your constant sort of empathy that you've shown and talked about throughout. Yeah. Risk and empathy sometimes don't sort of sit on the same.
But that is where we have changes.
I think that's the big change, right? And so thank you so much for that. Really appreciate it. And for folks that have been staying, I think there's a lot of good lessons to be taken as you get into this world of credit underwriting and housing finance and learn from what Rajneesh has been doing over the last 20 years. Thank you so much.
Pleasure. All Peters. Thank you.